order to be competitive in this market, you have to grow and develop talent organically. Not only does that create cultural match, but from a skill set perspective, once you learn what is successful here on this platform, you can recreate that.
In performance-driven industries, talent is everything. Whether it's auto racing, which requires knowledge of physics, mechanics, and engineering, or investing, which requires deep understanding of markets, economics, and human behavior, success hinges on expertise across multiple disciplines. And that's getting harder and harder to find. Today, the hedge fund industry is at the epicenter of the race for talent. The rise of the platform model has only intensified the need for specialized teams of portfolio managers and analysts who can uncover alpha opportunities across geographies, asset classes, and sectors. As Wellington's CEO is known to say, our most valuable assets walk out the door every night. The importance of attracting, retaining, and developing investment talent is more acute than ever. Hello, and welcome to the Wellington Investor Exchange. My name is Chris Perret, platform leader for Wellington's hedge fund business. Joining me today is Leslie Eisen, head of the equity long-short business here on our platform. There is no better person to speak to on the topic of investment talent. Leslie has devoted her career to identifying and developing portfolio managers and analysts across multiple hedge fund organizations. Leslie, welcome to the show. It's great to have you.
Thank you so much for having me. This is so exciting.
So why don't we get started, Leslie? I'd love to hear about your background, your story. How'd you come to Wellington? Let's get into it.
So I have been at Wellington for 3 years. I started my career on the sell side as an analyst. I transitioned into research management on the sell side, and I managed the equity research associates. There's 120 of them. I had been an associate, became an analyst, and I met with all 120 associates and said, how can I help you? And they said, I want to be an analyst. How did you do it? And so my first task was to come up with a development program to train associates to become analysts. And for me, it was easy enough for me to go to my playbook and go to what I went through.
For you.
What worked for me. I learned how to pitch the sales force and diligence companies and interview company managements and carve out a niche of my own, and came up with this development program called the Associate Analyst Program. I worked on this program and was recruited by SAC Capital at the time, which is now Point72. And my first task at hand was to meet with the portfolio managers and to really understand their process to be able to help them hire analysts. And once we had critical mass of this analyst population, we were able to focus more on development programs and teaching these analysts how to become senior idea generators and then eventually risk takers and portfolio managers. Fast forward 10 years, I joined a former SAC PM who wanted to launch a fund of his own, and he hired me as his COO. We launched April 1st, 2016 with a full team of 15 people, raised about $500 million, and it was great. But if you know anything about the energy cycle, you know how the story ends, and we eventually liquidated the fund. I got back on track to working at another large asset management firm who wanted me to focus on talent development. They had roughly 50 portfolio managers globally, and I was tasked to help each of them grow and scale and then help onboard new portfolio manager talent and help them do the same. Wellington found me through a recruiter. I actually didn't know one person here and joined, as I mentioned, 3 years ago. My first role here was as a director of research, where I oversaw a handful of investment professionals across a few sectors. And about a year ago, I joined the alternatives team overseeing the long-short equity business.
So there's a lot of roles in this business. What has always gravitated you towards the people side of things?
I self-reflected when I was an analyst, and I knew I wasn't a great analyst. And I wasn't going to be a great PM, but I loved the business. I still love the business. I love stocks.
What do you love about it?
I love investment process. I love being challenged every day. I love that it forces people to learn from mistakes on a daily basis, and you get a scorecard every day, and it's one of the hardest businesses that challenges people. It's intellectually interesting, it's dynamic and changing, and I love all of those pieces. I'm probably not a great risk taker, which is why I didn't go down the path of being a PM, but I can identify those who are. and I can identify those who are passionate about the same things. I fell into the research management role after giving up being an analyst, and the first task that I mentioned to you was this development program, and it blew me away, and it really did set the tone, what I said, in terms of what I want to do the rest of my career.
So you mentioned you have an eye for talent. What makes a good PM and or analyst, especially in today's environment?
Yeah, great question, and interesting how you ask it, because I would celebrate awesome analysts. I would celebrate career analysts who make amazing analysts, and there is so much pressure or thought around analysts having to become PMs, but the truth is the best analysts are those who are comfortable doing that. That's not to say analysts can't become great PMs. Of course they can. And to become
it's a different
PM,
skill set in a lot of ways, right?
Totally different skill set. Risk manager versus doing the analytical deep dives. The best teams are those who have both excellent portfolio managers and excellent analysts. And your question was, how do I identify solid talent? And it has evolved over the years, but there are some consistent themes. Those who can fail and get back up quickly, those who can re-underwrite a process, a stock, a thought, a theme, who are unemotional about making these decisions. They're stocks, not emotions or people. Those who have a repeatable process that is scalable. Those who can learn, have a deep intellectual curiosity of learning, and those things have not changed over time. What has changed in my time in this business is back in the good old days, you could invest in stocks and companies that were fundamentally changing for the better, and you could short stocks that had poor business models. Now, that is one of many pieces of a mosaic in terms of making investment decisions. There are technicals, and there are sentiment issues, and there are factors to consider. And those who are able to be nimble enough, who are humble enough to change constantly, are those who are most successful.
Let's talk about talent development, something you're real passionate about. What's the key to success there? How do you get a PM or analyst from good to great?
I get that question all the time. My first answer is always, you can't call it investment talent, you have to call it human development, because so much of what goes into developing talent is around mental health and thinking through process, and are you thinking clearly? Are you seeing the ball? What resources do you need? How are you spending your time? Are you glued to the screen? Things that sound so obvious, but I don't sit down with portfolio managers and tell them how to risk manage differently. What I do is I ask questions about how you're seeing the ball, and that can inform a portfolio manager on their level of conviction. They appreciate being able to talk about the process out loud and being challenged and holes being poked into their process, as opposed to teaching them how to be a better portfolio manager. I am a part of it, but I can't take full responsibility into the ecosystem we have here at Wellington in terms of helping portfolio managers. We have strategists, we have macro investors that inform equity investors, we have risk tools, we have systems, we have data, vendors. Corporate access, the research team, that it's the engine of the firm and a centralized resource. All of these things are at the fingertips of portfolio managers and analysts here in the hedge fund group, and it's my job to direct the team members on accessing those resources appropriately.
Leslie, I love this concept of you helping PMs see the ball. Can you share an example of how you've done that in the past?
Sure. So many. I can think of one portfolio manager who was going through a drawdown, and you really never know how good a portfolio manager is until you see them go through a drawdown. And the portfolio manager came into my office, had 3 analysts, and said, I don't know what to do. Was going through a drawdown and was essentially paralyzed, and wasn't looking for me to push back on the portfolio, but was looking for help on being able to re-engage. I spoke about reconnecting with his analysts, and the best way to do that was to underwrite every position in the portfolio. It sounds like a tedious task at hand, but what that did solve is reconnect him with his analysts who he had shut out of his office and process because he was paralyzed, and he reconnected with the analyst, gained conviction in the names that he wanted to express, and cut the positions that the team didn't have any conviction in. And it was a slow grind, but the benefit that came out of that conversation was re-engaging with the analysts, A, B, pulling out of the drawdown.
That's great. So you started getting into telling us a little bit about what we're building here at Wellington talent-wise. So how are those efforts going?
Great. We have an amazing team of portfolio managers and analysts within the hedge fund group who have been here for some time. We're also in the process of hiring new portfolio managers from the outside. I've interviewed probably hundreds since I've been in this seat, and I'm excited to bring on, and we've hired a handful of new PMs who are in the process of starting, and our story seems to be resonating with them.
So what do PMs find surprising when they come to Wellington?
The first question I get is, oh, I didn't know Wellington has long-short equity. And so it's an education of our history and the story of how long we've had hedge funds, which, as you know, has been over 30 years, and educating them on what we're building and what we're looking for. And after the education, they get very excited about our ecosystem. Today's environment is very competitive around talent, and there are many fabulous firms out there that have hired many people and who have many portfolio managers. What we're offering is just something different. We aren't competing necessarily with the exact offering of some of the other firms. We have our own pitch, and it seems, again, to be resonating with candidates.
So I'm sure you've perfected the pitch at this point. What's the Wellington pitch in terms of PMs or analysts that you're speaking with?
The one thing that seems to be resonating most with candidates is our duration. The pitch is to come here for duration of capital as well as duration of career. So leading with that conclusion gets them interested. We also appreciate portfolio managers to be investors, again, to take risk, to take tilts, and to leverage all of the skills they've grown up as investors. To collaborate with an incredible ecosystem, to come in and day one have access to research engine, as well as plug into our corporate access and to plug into our risk tools is attractive, while also offering an entrepreneurial offering to help build and grow a business.
So let's switch gears now. What asset classes and strategies are seeing increased demand, and how is Wellington addressing those shifts?
Low net, long short equity is a very competitive and attractive market right now for many reasons. We're playing that same game as well, and many of the people that we have hired and are looking to hire fall into that asset class. I don't want the pitch to just be qualitative, it's actually economic.
Lastly, one thing that's very apparent, we see it every day, is just the compensation piece as it relates to the talent mosaic and having a competitive offering. How are we addressing that piece?
My very first conversation with any candidate is explaining to them who we are and who we're not. And our model is not looking to pay incredibly large packages to someone for 1, 2, 3 years. Going back to the duration, we're looking for someone to come here for the next 15, 20 years, the rest of their career. And economically, I would argue we are extremely competitive over the duration of the time a portfolio manager is here in different ways. And we do that not only through direct compensation and a competitive payout on the product, but there are other levers to pull as a portfolio manager here and to be able to be paid with multiple economic streams. Additionally, we are a private partnership, and the path to being a partner here is part of the pitch for economics. We're looking for people who want to be part of our collaborative culture, and becoming a partner is not just an economic thing. It is someone identifying people who want to be part of the dialogue and who truly want to help build something and make the firm a better place.
Yeah, I think the entrepreneurial piece is huge, especially in a world where you really, in some cases, don't have that option because a lot of these firms aren't at this point really growing.
It's a good point. The candidates I'm speaking with who have tried to run their own funds are those who are most excited about making that switch because they still can be an entrepreneur, come here, still build a business, but have the resources available to them to help grow their own business the way they were hoping to be able to do that on their own.
So what are your thoughts on the future of talent, both from a development, from a recruiting perspective? Where does this go?
In order to be competitive in this market, you have to grow and develop talent organically. Not only does that create cultural match, But from a skill set perspective, once you learn what is successful here on this platform, you can recreate that. We have an emerging manager program, and that is a program that works on developing talent by allowing them to incubate. So they are actually running a portfolio with a small amount of capital and have a curriculum to sit with risk managers, to sit with other portfolio managers, have a mentor. And that is something I'm really excited about doing.
So Leslie, one more question as we wrap up. You've experienced a lot. You've seen a lot in this industry. Based on that, if you could go back into your college days and take some more class in something, what would that be?
I wish I took more classes in psychology. In fact, I wish I went to graduate school for psychology. So much of trading is around psychology. And I've spent many hours with portfolio managers and trying to help where I can, but I could go back and get a degree in psychology. I would only be better.
That's great, Leslie. Thank you for your time today. This has been incredibly insightful. Again, your experience and knowledge and insights on talent in what is a huge topic in this industry, I know will be very beneficial for our listeners. So thank you again. It's been great having you on the show.
Thank you for having me.
The Investor Exchange podcast is a production of Wellington Management. Our producers are Colin Hopkins, Amanda Doherty, Mark Murphy, and Dana Wickstead. The show is recorded, mixed, and edited by Mark Murphy. Production support from Dave Crow and Rasa Sermont. Animation support from Rasa Sermont. You can listen to the Investor Exchange at wellington.com and most podcast providers. Thanks for listening.
All investing involves risk, including potential loss of principal. Past results are not a reliable indicator of future results. Forward-looking statements should not be considered as guarantees or predictions of future events. This material was current as of the publication date. Wellington assumes no duty to update the content in the event that the information changes. This commentary is provided for informational purposes only. It is not research that is required to be prepared in accordance with legal requirements designed to promote the independence of investment research, and it is not subject to any prohibition on dealing ahead of the dissemination of investment research. It should not be viewed as a current or past recommendation and is not intended to constitute investment advice or an offer to sell or the solicitation of an offer to purchase any securities. It does not take into account the investment objectives, financial situation, or needs of any actual or particular person. Wellington Management does not provide legal, tax, or accounting advice. The views expressed are those of the speaker and may not reflect the views of others at Wellington. This recording may not be reproduced or distributed in whole or in part for any purpose without the express written consent of Wellington Management. Please refer to the disclosure section of this podcast for complete details.